Hello guys, today we're going to do a video about price action and trading styles. The trading styles that I'm going to talk about is trend trading, range trading, breakout and scalping. The reason why we're doing this video is because you need to be familiar with these concepts in the future, because in the following videos we're going to be going very deep into advanced technical analysis, and it's important for you to understand what we're talking about. What you need to know is that the price action is generally moving in three different ways. It's either trending up, it's either trending down, or it's not trending. It's consolidating or moving in a specific range. Each one of these different ways that the price is moving can be going with different volatility. So it can be trending up with high volatility or with low volatility. They can even be high volatility range. What's important for you is to understand in which state the price is moving at any given time, so that you can use the correct type of trading strategy for each of these specific price movements. We're going to start with trend trading, and we're going to go to cTrader. So I'm going to show you about trend trading. Here we see in the EUR/USD chart, in 1 hour chart, we see a trend. The characteristic of a trend is that the price is moving towards a specific direction. In this case, the price is moving up. That's why we have an uptrend. The major characteristic of a trend is that in each swing on an uptrend, you have a higher high and a higher low. So if you see here, in this particular swing, we have this low point, then the swing goes up, and it makes a new high point. Then it makes another low point, which is higher than the previous low. And then a new high point, which is higher than the previous high. And it goes on and on and on. That's the main characteristic of the trend. If it was a downtrend, it would be lower lows and lower highs. Let's talk about how we usually trade in trend trading. I'm going to give you the most widely used trading styles. I'm not going to go into very much details because this is an introductory video, but we're going to cover all these kind of trade styles with extensive videos. The main and most popular method maybe of trading trends, if you have identified that you have a trend, is to trade it with some kind of moving average crossover. So I have here a 200 period moving average, which is the high period moving average. Let's put a lower period moving average, 100. In this case, what we're doing is we're entering on when the slow moving average is crossing the high moving average, like in this spot, for example, and we exit on the opposite signal. So we're getting a major part of a trend. Next trading style is we can trend trade with using trailing stops. In cTrader, you can find the trailing stop settings here for your position. You can set up your trailing stop. There are explanatory videos that explain how this is used. But what's going to happen in a trend if you're using a trailing stop? You're going to have, while the price is constantly moving up and the trend is developing, you're going to have a trailing stop, a stop loss that trails the price, and it's going to stay a particular number of pips below the price. So it's going to go up and up and up, and at this point when the price goes down in a bigger amount of pips than the trail, the stop loss is hit, so we get the major part of the trend. The next method that we use to trade trends is trading retracements of the trend. Let's set this up again to 200 periods. So as you can see in the trend is usually going up, then it retraces back to the moving average, going up again, retraces back, going up, retraces back. So you can trade all these particular points when the trend is on the moving average. You can enter long, and you can exit in with various ways. So this is reverse trading on a trend. In a trend, the trend is usually going back to a moving average. So if you put an oscillator, most probably it's not going to go into the overbought area or oversold areas because it's too low. The oscillators are used for range, which we're going to talk about in a bit. And another way of trading trends is using the changes in volatility. So let's take a volatility indicator here. Let's put Bollinger Bands, and let's zoom in. So when we have a trend, what's happening is usually we have low volatility periods, which are followed by high volatility periods where the trend is developing. So in this case that we're using Bollinger Bands, let's kill the main line and have only top and bottom. You're going to find spots that the bands are very narrow. That means low volatility, like this spot. You can enter long here and there's going to be a burst of volatility afterwards. Same thing here, low volatility. You can enter long and it's going to go up. Another way of trading trends is using price patterns. You can use widgets or flags. We're going to talk about them in other videos. Price patterns are, when the price is moving, it makes specific price patterns that mean specific things that we're going to talk about. So that's another way of trading the trend. And we're going to do dedicated videos on all of these different trading methods. This video is an introductory video. It's about helping you understand what a trend is. So we're not going to go into further details. Now we're going to talk about range and mean reverse trading. When the price is moving in a range, it means that it's actually not trading. It means that it's moving up and down, or having specific supports and resistance levels, and it continues straight on. Usually on a range, you don't have volatility spikes of low and high volatility. You don't have any news, or people are expecting for news. That's why the price is not going somewhere. Let's go to cTrader, where I'm going to show you technically what we mean by range trading, where we have a range here, which I found on the 10-minute EUR/USD chart. As you can see, like I talked before, the price is moving up and down. It's oscillating without having a specific direction going up or down. We see here support and resistance levels being developed, and that the price is moving in this specific channel, which is a straight channel. So how do we usually trade ranges? The first more popular method of trading a range market is by using an oscillator. An oscillator is an indicator that oscillates between from a specific value in the middle, and it's showing overbought and oversold areas. Here we have the relative strength index, which is considered to be overbought at 70 price and oversold at 30 price. So what we're doing here is we're finding places that the price is on the oversold or overbought areas and going long or short. We're actually buying low and selling high. So let me mark these places better for you to see. So for example, we have a trading signal here. When the price is on the 70 area, we can go short here. We have another signal here, we can go long here, we can go short here. And if the market is ranging, we're gonna get these good trades. Let's talk about mean reversing during a range period. Mean reversing means that the price is always moving around a moving average. So if I plot a moving average here, trend, simple moving average, let's plot a 100 period moving average. We see that the price during a range is always oscillating around the moving average. So when we're reversing, what we're doing, because we want to get a sure profit, we're entering the same way we entered before on the overbought and oversold areas, and we have an exit right at the moving average, which we are sure that the price is going to go. So we can enter here and here and here and here. Another way of doing the same thing is without using an indicator. We can use support and resistance level. So we can have the first support level here from the first swing, first resistance level here. We can be getting all these short signals. Same thing. We can be using candlesticks formations. So we can be using hammers, for example. We see here big wicks on this candlestick. It's a hammer. We can confirm it and go short. See here we see a big hammer, another reversal. During a trend, a range trading, as I said, usually there are no major news. And actually, that's it about ranges. I'm sure after that you understand what a range is. Now let's move to the next trading style, which is scalping. So what is scalping exactly? It has become very popular with trading platforms now with very good internet connections, especially with trading platforms like cTrader, which is a no dealing desk platform, which means that no one is on the other side to mess with your trading, so you can actually scalp the market very successfully. Scalping is a pretty simple concept. It means getting a very small part of the price action for your benefit. So practically, what does it mean? It means like if the Euro USD is doing a 150 pips range in a specific day, you're just doing positions and getting from, I don't know, half a pip up to 3-4 pips. These are very fast, very small trades. You're taking advantage of the volatility, and that is scalping. I'm going to show you in cTrader now how we usually do scalping. There are two major ways of doing scalping. One way is let's remove all the objects we have here, and okay, we see here the chart. Okay, cool. One way of very famous way of people scalp is they trade specific candlesticks. What they're doing is they're finding specific, very high probability setups, like a reversal here. So let's say, for example, we have here a doji candlestick, which means that the market is not knowing what's supposed to go next. The buy and the sell are equal. Then you see some kind of confirmation. It doesn't go higher than here. Then you see another candlestick, which means that a reversal is happening. And then on this candlestick, scalpers start entering. And they enter on this place with a very small take profit. For example, they enter here. Let's do limit orders to show you. So they enter like in this place with a very small take profit, like this take profit, very conservative stop loss like this one, and they're getting their money. This is one method. I'm going to show you now another method, which you can only do on cTrader because it's one of the very few platforms that offer tick charts. What scalpers do is they just load a 1 or 2 tick chart. cTrader offers from 2 ticks up to 34 tick charts. So when you have a 3 tick chart, you zoom into the price a lot. So you can do your normal technical analysis. Instead of doing what we showed before, which you're getting a very small part of the candlestick, you can load your template and you can do normal technical analysis. You can load your Fibonacci tools, you can load your indicators, you can load everything, and you can be trading like you're trading normally, range, trend strategies, but because you're zoomed into the charts in a lot, you're only going to be getting small amount of pips because the charts are, this range, for example, is just 6 pips. So if I enter here and I get a take profit here, I'm just getting 4 pips. Next thing that we're going to talk about is breakouts. In breakout trading, what we're doing is when the price is leaving a specific range, which is usually a consolidated range, which means that it doesn't have a big volatility, we try to assume that there's going to be a trend that's going to develop after this low volatility. Breakouts fail a lot. So you cannot, I don't recommend trading breakouts using only technical analysis because you're going to have a lot of failed signals. The whole point of the breakout is that the market is expecting something and that something happens and then you have a big move. So when trading breakouts, try to see the economic calendar, try to see the news, try to see what's happening for the currency that you're trading. And then you're going to find when it leaves some specific consolidated period and you have big news, some move is going to follow. So, however, let's see that on cTrader. So let's put a 10-minute chart. Let me show you what a breakout is. Let's put again, let's use Bollinger Bands again. So the breakout is actually in this particular area here, for example, or in this particular area, we see how low the volatility is, that the price is consolidating a lot. If we change that 10-minute chart to a 1-minute chart, we're going to see that the price is going to be moving on a range in this particular spot. So what we do is, when we see that there is a spike of volatility, here, for example, like this, we assume that the trend is going to develop, and we trade it using some kind of moving average crossover like we did on the trend. This is a better example. Again, the price is consolidating here, then it starts going down. Let's put a couple of moving average indicators. So let's put like 200 again, and let's put like 1 second. Let's put 50 period here. So after this breakout here, we see the slow moving average below the high moving average. We wait for them to cross again to close our position, and we're going to get all the movement, but that is going to go after this. So with breakouts, we're covering all types of trend movement. I remind you again, this was just an introductory video for you to understand the basic concepts. We're going to do a lot more advanced videos in the future about technical analysis, about each of these setups, about the risk-reward ratios and where to place your stop loss. Don't forget to always be using a stop loss, etc. If you like this video, don't forget to subscribe and also share it with your friends. So thanks for watching.